Not another fucking podcast.
Yeah, easier said than done.
Welcome, guys, to a first guest appearance podcast with Daniel Lipman from Blueprint Finance here on Easier Said Than Done. Welcome to the show.
Thanks so much for having me, Tama.
Yeah, not too much pressure being the first guest.
Oh, dude, pressure's on, but at the same time, man, feeling blessed, eh? What an opportunity to come join the boys and talk a bit about property, yeah.
Cool. Well, the thing is, like, you guys would have been following, you guys are avid followers of mine, you know, see all the stories I do. When we were giving an announcement to people we're doing a podcast, and I asked the questionnaire, what do you guys actually want to hear us talk about? The number one thing they all said was finance.
Yeah.
You know, they were literally like, how do I get finance? How do I do this? Interest rates are so high. Banks telling me to get fucked. What do I do? Who do I see? Who do I talk to? You know?
Yeah.
And that's always in my DMs as well.
Absolutely.
Yeah.
Yeah.
So you being a mortgage broker, how important is it to have a good relationship with your broker?
Oh, mate, it's the most important thing. I think you've said many times yourself, Tama, and obviously if people were to hear any mortgage brokers talk, they'd hear how important it is to have that relationship because it's someone that advocates for you, right?
Yeah.
When you go direct to the bank, you are going to risk the fact that you're not representing yourself properly. Perhaps certain things about your situation, say, for example, income, your equity position, or your personal finances, if you've got some non-paid debts and things like that, you're not representing yourself properly. Now, you need a broker just to have that initial conversation and say, look, these are the strengths of your application, these are your weaknesses. So we need to spend a bit more time here, sharpen things up, and present it to the lender in the right way. Because not only is a difference between getting approved or not, it's a difference between what funds you actually access to as well.
Yeah.
So, you know, regardless if it's one of the advisors at Blueprint Finance or another broker, the most important thing is to establish a relationship with someone that you can trust.
Yeah.
Get a mortgage advisor and get them on your team. You know, it's part of the team, right? You also got your lawyer, you got your accountant, and then you got your property coach, your property mentor as well, to building a good, successful portfolio. So we play that role and we take it very seriously. And it is probably one of the most important things.
Yeah.
Obviously, it's really important to buy the right property, but even more important is, you know, are you funding this correctly based on your situation?
Yeah. Now, if we were to dumb things down, you know, when you're at a party and people just nod along and think they know what other smart people are talking about. But there's people out there that have absolutely no fucking clue about anything.
Yeah.
They don't even know what the word equity means. You know, they think it's a new song.
Yeah.
If you were to describe what equity is to someone that is absolutely fucking clueless, what is equity?
Equity, the latest Taylor Swift song.
Yeah.
So equity can refer to a few things, but essentially it's meaning your accessible cash, right?
Yeah.
So it can be liquid and non-liquid, right? If you've got $10,000 in the bank, that's equity. But also, if you've got $1 million property that's got no mortgage on it, that's your equity, right? That $1 million. Say you had a $500K loan on that, your equity will be the other $500K.
So that's the difference between being equity and usable equity, right?
There's a big difference between that.
Yes.
Yeah. So you're exactly right. Your equity can just be that $500K in this last example. You got $1 million property, $500K loan, $500K equity. But your usable equity is different. Because usable refers to what you could actually withdraw.
After the bank's taken their fucking dibs, that's mine first.
Dead right. Yeah. Or they've got their limits, right? Because to be completely transparent, you're getting a first mortgage on a property. If you can't pay that mortgage, the bank owns it. They're going to sell it, right? So that's the risk that we play with property.
Fair enough.
They'll lend up to 80% if it's your own occupied, but they'll lend up to 65% if it's against an investment asset.
Yeah, cool. Now, second question. Are mortgages an absolute scam created from the Federal Reserve to keep everyone poor?
Oh my God. Going to get me in trouble with the banks, hey?
No comment on that one. But you've probably like gone down the rabbit hole and seen like how mortgages were done, the Big Short movie.
Oh, dead
and
right.
like you know, when I watched the Big Short, even those fucking celebrity cameos didn't explain it well enough to me. Because this came out like 4 years ago, 5 years ago, whatever, right? Do you watch that movie and you know every single thing what's happening in it?
You didn't pay attention with the Margot Robbie scene?
No, that was all good. That helped. Yeah.
No, well, to be completely honest, there's some really complex stuff. Obviously, as a mortgage advisor, I'm not trying
different country as well.
Totally different country, but it's very similar premise, right? You know, I deal with the cold face, so I'm an expert in terms of what the actual product is, which is at the very end of the chain, right? Because you got these big institutions that lend the money out, just like you see in the movie Big Short, package it together, and then sell that as a return, and then our retail purchasers,
Yeah.
buy mum and dads or investors who buy assets get the last mortgages, right? So in that film, I mean, it touches on some very important points that, the economy is just like a personal finance. We can actually break it down to compare it to someone's personal finance, right? You got a big economy, a gig economy, so many different things going on here. But at the end of the day, you got your equity and you got your debt, right?
Yeah.
Just like the US government. They had equity, their assets, and they also had debt. And what they did is that they kept leveraging, they kept creating more debt to spur on the economy, make everyone richer.
Did it make the equity smaller?
Make the equity smaller.
Yeah.
Or it got to the point where there was more debt than equity. Which is,
Yeah,
it's
that's
never-
like people that bought wrong in 2021.
Yeah, there's people who have that with their regular situation now,
Yeah.
which is okay. If you wait it out, it's going to be okay.
Yeah.
But it's not going to be okay on a government scale.
No
So
way.
that's why it was literally, you see the
GFC happened.
GFC happen in the analogy in the movie where it's just the
Tower falls
dominoes
over.
falling over.
Yeah, yeah.
Exactly right. So it's similar with personal finances in a scheme that obviously if you're leveraging too aggressively, meaning borrowing,
Yeah.
you can really get yourself in trouble. That's why a mortgage broker and a mortgage advisor and a property coach is so important,
Yeah.
because they can teach you how to leverage responsibly to actually reach your goals. Because what's even worse, not getting the advice, is not getting the advice and just going and doing it and saying, hey, I've got income, I've got equity, I'm going to buy as many properties as possible. And you'll be the first to say
The
that.
fuck it YOLO way.
Yeah, the effort YOLO
Yeah,
way,
yeah.
dead right. And you might do that and then realize, damn, I bought horrible properties, my cash flow stinks,
Yeah.
like I can't afford this. And then you have to sell and take a massive loss, which unfortunately we meet people now
Yeah.
who have got that advice.
But at
over the
least
last
my
couple of
friends
years.
think I'm cool, eh?
Yeah, exactly.
Yeah,
At least
terrible.
I took a picture in front of the photo sign.
Yeah.
I mean, that's no disrespect to people who have ambitions to be property investors.
Yeah.
You just need a bit more help, which is
Exactly.
absolutely fine.
Yeah. So going on to practical stuff, in New Zealand, here we've got 4 major banks, right?
Yeah.
The main banks. And what people don't realize, there's other types of banks that can do different types of products for people's situation.
Yeah.
Like I remember when I first started, and to break it down into like absolute layman's terms, they call it like second tier lenders,
That's
right?
right. Yeah.
But in reality, it's like a flipping bank.
Yeah, dead right.
Like people are like, what? There's a flipping bank?
Yeah.
And when you say second tier, they're like, they don't know what tiers are.
Yeah.
They don't know. They know tiers on like a cake. That's
Yeah.
it, right?
Yeah.
That was me. I always like to break it down, throw me the idiot in the fucking middle of this.
Yeah,
when
yeah.
I first started. Flipping banks are also a thing. So people need to have a bit, and then there's third tiers, right?
Yeah.
Yes, I don't know what the hell they're called.
Yeah, no, it keeps going. Well, that's what I love about you, Tama, is you're always hungry to learn. And
Yeah.
You're not afraid to look like an idiot. And
Yeah.
me too as well.
Yeah.
Just ask the right questions.
Correct.
So you're dead right, there's tiers. And people refer to it as second tier, third tier, or you can just say non-bank, right?
Hmm. Yeah.
So non-bank refers to a financial institution
Yeah.
that doesn't operate under the guides of the Reserve Bank. So
Correct.
they can do some stuff that's a bit, off the sheet and a bit out of the box,
Yeah.
right? And for what we do, especially you and I, for property traders, there is banks that specifically target and work with property traders, right?
Yes, correct.
And they charge higher interest rates than the main bank because it's business lending.
And it's a
commercial lending.
short-term loan.
Short term, and it's slightly higher risk, right? But all it means is it gives our clients an opportunity to get easy access to funding and straightforward numbers that they can package into their profit and loss, right?
Yeah.
When they jump on Investor Pro, they can sit down and say, cool, I know that my finance is going to be at X rate, there's going to be a lender fee of X. How much profit do I have to make on this deal to make it work? And so they can go out shopping with confidence, because it's really easy to get pre-approval with these ones as long as you have equity.
Yes, correct, which is the main thing, right?
You did right, yeah. So that will be an option for some people, but if people have, mortgage-free properties, assets they can use, they might have access to other lenders as well.
Yeah.
It's always just worth a conversation with your advisor to get a piece on what you can do. But yeah, you did right. There's so many different options in this country.
Yeah.
We're not as privileged to say the States or Australia, who have 80 different lenders.
Oh, fuck, you can buy a house in America with 3.5% deposit.
Oh, it's insane. Yeah. And they got the beauty of long-term fixed rates. After the GFC, they used to have the short variable ones like us.
Yeah.
But after the GFC, you fix for 15 years or 30 years.
Yeah.
So for your long-term stuff, you can really hunker down. We
Yeah.
don't get that privilege.
So in a summary just there, mainstream banks give a shit about your servicing, how much you actually earn,
Yep.
and what type of spending you're doing.
Yep.
They want your 3 months bank statements of personal accounts.
Yep.
They want 6 months worth of credit card statements.
Yep. Yep.
So obviously you need to plan for that, especially the 6-month one, the credit card one.
Yeah.
So obviously if you're like, this end of this year, I'm going to plan to buy my house,
Yep.
and you're still spending like a fucking idiot on your credit card statements now,
Yeah.
that will bite you in the ass, right?
Yeah, absolutely.
Second tier now don't give a shit too much about your all of the above, but they want to know where is that 35% in either equity or cash.
Yeah.
Yeah.
Absolutely.
In a nutshell.
In a nutshell, I mean, there's so many things to it, right? We always look at a loan application like a SWOT analysis. We highlight the strengths. If the strengths are really good, we could get away with some of those things,
Yep.
like you're saying, like some poor account conduct and those
SWOT,
sorts.
strengths.
Strengths, weaknesses, opportunities, and threats.
So SWOT with an O.
Yeah, with an O. Yeah,
yep.
yeah. What would you think with an A, like a SWAT team?
Yeah, not the ones that raided my neighbor's house where I used to live.
Yeah, not the ones who kick your
Yeah,
door
not
down.
those ones. Yeah.
Yeah, so that's just, again, in layman's terms, a good way to think about it, and how I explain to customers, like, hey, this is where you're really strong. So we'd be main bank all day for these points, but because of this one thing, it's holding us back right now. So
Yeah.
we need to get this sorted. It might take 6 months, 12 months, 18 months, and we can get back to main bank.
Yeah.
But obviously, if it's a trading client who is looking to do a short-term lend, it's probably going to be non-main bank.
All right, cool.
Yeah,
Some other questions people might have is when you're working like say a sales job, right? And you get bonuses.
Yeah.
How much do the banks give a shit about the bonuses?
Great question. And that's the beauty of working with an advisor, but also having multiple financial institutions,
Yeah.
is that different banks actually look at that differently. So some can actually look at your last 3 months
Yep.
and just take an average of your last 3 months and shade it a bit.
That's
by
nice.
80%,
Yep.
which is ideal. But it has to be, it has to be regular.
Yeah.
You know what I mean? It can't just be, oh, you've got this one-off bonus.
Yeah.
You got to give some context.
Yeah.
And there's ones that want 2 years. And then when you use the average of
Fucking
the last
2 years
2
worth of
years,
sales
bro. Yeah.
post-COVID in this environment.
Yeah, yeah.
Fuck, good luck.
Exactly. So, obviously, you can imagine when I sit down with my customer and they'd say, hey, you know, I have a 50K base, but I earn majority of my income from commissions.
Yeah.
I've got some certain banks in mind that I would pick.
Sweet.
That I'm not going to name in this podcast.
Yeah, hard, yeah, nice.
Yeah.
Yeah, okay, cool. And obviously, because there's no real, and with the pay slips, they want, if you get a job, but you're within the 90 days,
Yeah.
how much chance do you have getting that approved for a long-term buy and hold with a main bank?
You're in your 90-day trial period.
Yeah, you got a job yesterday.
You got a job yesterday. So in many cases, if everything else, like I said, the SWOT checks out
Yeah.
in terms of everything other aspect of your
Yeah.
application, you should be okay. If it's 90 days in the contract and it's very clear, hey, we can get rid of you in 90 days.
Yeah.
We can just get a waiver from the boss to say, hey, things are actually going pretty well, boss. We're going to waive it, which, to be honest, every time that's happened, the boss has been happy to do.
Yeah.
So that's what we would do in
Cool.
that situation.
Yeah. And a lot of things like with growing software and tech, right? There's a lot of places that are utilizing tech for helping people do their applications, right?
Yeah.
Because I remember when I had to do this new loan and this and refinance it, there's like fucking 50 pages you have to do, and then
Yeah.
you have to get your partner to do it, then you have to get your mum to do it.
Yeah.
And everyone's like, this is fucking a nightmare.
Yeah.
Just to be told no.
Yeah.
So now with technology coming in, are there certain things that you guys are looking to implement for your clients?
I mean, AI is the most exciting thing, I think, across all industries.
As in,
right?
like, edit my payslip to say I earned 3 times this?
Holy, once again, apologies to the regulators watching. And in terms of, but I mean, you've got an awesome point. Like, we can take so much of the legwork out of that piece for the customer,
Yeah.
and not only qualify the client quicker, but make the handover piece easy for them. So when people say, "Oh, AI is going to destroy industries,"
Yeah.
I totally disagree. You know, I totally disagree, because so much of that work has already been done, right, in terms of automating things. Like, say for an accountant, for an example, you know, if you were going to make a massive accounting decision that was going to change the rest of your life, maybe it's in business or in personal with your personal investments, you know, you just wouldn't let the AI say, hey, this is the right way to go. Tick, 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 tick. You would sit down with someone who's got the experience, got the knowledge to actually get that signed off. Maybe the AI would recommend that, but you would get that final answer from someone who seriously knows what they're talking about, right?
Yeah.
So I think the beauty of AI is it's going to make everyone's life so much easier, so we can do more, get more time back. But I think it's never going to override the importance of, say,
human.
having an advisor or having a property coach, who can actually look at the deal. Like, when someone comes to you with a property, they say, you know, they're not going to ask an AI what to do. They're going to say, Tama, a guy who's done over, 50 to 100 trades, or been involved with those, you know, is this a good deal? What do I have to think about? Like,
Yeah, what am I going to do? Turn to ChatGPT and be like, I don't know, Let's ask what ChatGPT says.
Yeah, because you can actually put yourself in the same position as the
And
client.
it'll reply, do you still want to edit those pay slips, Tama? No, hey, close that down, close that down.
Wrong job. That's my mortgage broker.
Yeah. Jesus. Yeah. Okay, well, that's cool. Overall, one thing, this is a good thing my dad said as well, like, when it comes down to getting a mortgage approved, right?
Yeah.
There are certain people in the transaction and they all want to get paid. That's the one thing he said. Look, these guys are fucking, you talk to the broker, he's going to send the application to the bank's going to do it. They are looking at there trying to make it work. They're not out here trying to just tell everyone to get fucked.
Yeah.
One of the biggest spenders in advertising in this country is, like, when you think about it, billboards, ANZ, fucking mainstream Westpac here, sponsor the helicopter, billboards, bus billboards, like TV commercials, the black caps, like so much money goes into their advertising every single fucking day, really. For them to say, nah, they're actually trying to make it work, right?
Yeah, they are. Yeah, and I mean, it's in everyone's interest as well in the long run. Like, obviously, you get so much of this commentary saying, banks are evil and those sorts of things.
Yeah.
But I mean, I disagree. Everybody wants the solutions that they're offering, right? Which is the cheapest possible funding, competitive rates.
Yeah.
Because there's so many institutions that are fighting for that. Yes, there are 4 major banks, but there's so many things that go into their competitions to get the best rates and offer that to the customers. So, they are the 4 most profitable businesses as well.
Yeah.
The 4 major banks in New Zealand. Because they provide solutions for people. Like, people say, racking up debt, leveraging mortgages. But at the end of the day, like, you talk to any successful person in this country, you can best rest assured it'll probably at least 50% of their income or equity came from real estate. Right?
Oh, 100%.
Just buying really good assets and holding over
absolutely
time.
New Zealand.
Yeah. So I reject this whole idea that, banks are, evil or doing bad things because they're providing solutions that people need. Right? So to answer your question, I think there's a reason that reach is so massive. It's because they're solving problems for people, and you're saying there's people behind there that are trying to get good things done. Yeah.
That's the things. What you would know when you have clients that have actually like an abundance mindset, scarcity mindset, people that actually want to fucking better their lives, or they're just doing this because they're like,
the pressure, right?
Yeah, the pressure. Like, I just want to get out, stop renting, so I'll buy a house, but they have no other drive outside of that. But obviously, each to their own, right?
Yeah.
When you see them come forward with providing statements, is there anything like big red tickets that people should know about to avoid?
Oh, sort of red flags?
Yeah, red flags, triple CFA stuff that they'd pick up on.
Yeah, for sure. I mean, what I like to say is that I really like to take away this idea of sort of not really red flags, but like people saying, you can't go to the bank if you've missed a payment and things like that. There's always something we can do with a really good diary note, which is just supporting information with the application to mitigate those things. So just have that conversation first. Don't feel like ashamed or say, maybe I missed a couple of payments, or you feel like you haven't been saving that well recently.
Yeah, I know.
Because a lot of clients come to me and they say, I'm going to really, we had a big Christmas or I had some emergency expenses. And they're actually way better off than they think.
Yeah, because everyone had a really big Christmas.
Yeah. Everyone had a massive Christmas. Yeah. The spending was huge, regardless of interest rates
fucking the
being
bank's
high.
person who's reading the applications while we're checking his own account.
Yeah.
Being like, my fucking mother-in-law came along and bled me dry.
He's like, this is better than me. You only got 3
That's
credit
the other
cards
thing about
overdue.
it, to think about. The people that are fucking accepting the loans, what are they on? Like, how's their spending? They go home and rot Netflix and watch their own things and fucking subscribe to this and Amazon Prime and this. They are the same human beings.
Yeah, exactly.
They aren't droids just sitting there and we're actually submitting to AI. Not yet.
Exactly.
These are people.
They're humans.
They're like, lol, he's like Amazon, Netflix, Disney Plus, fucking HBO, Paramount. He's like, I've got 6 of those too.
Everyone's got those.
You know? Or he's like, I just Pirate Bay this. Idiot. Why is he this?
I use my mum's Netflix.
Yeah.
Well, next time credit comes back to me, Tama, and they say, the statements aren't good enough, I'm going to say, how are your statements?
Exactly. Send me your fucking bank account. Tell me my client can't get approved. Show me your portfolio.
Oh my God.
And the other thing is, when are you at the point now yet, or not really, where you want to be sort of advising your clients that I have seen this property, the numbers, this is trash. You shouldn't buy this. Are you guys allowed to advise them on that?
That's a really good question. I mean, you come under the board of advisor, right?
Yeah.
Like, very much like yourself. If someone asks you for advice, I'm very careful, because if someone asks me for advice, regardless of even if it's about interest rates, I'm not just going to tell them what it is. I'm going to ask way more questions. So that question that you say, here's the property, I'm not going to say this is trash. I'm going to say, okay, what are you actually trying to achieve? But because by activating that part of the brain, you're getting the client or the
To self-realize.
person to self-realize, yeah. So next time, teach a man to fish, right?
Yeah.
Next time they get there, they can actually figure it out themselves and say, okay, wait, what am I trying to achieve? Because I've been there. You know, when I started when I was 21 in property, you're just obsessed, right? You're mad, just like you would have when you get that property bug, right? And you're looking at deals. And
Well, I didn't have that till I was like 27.
yeah, it just happens.
Yeah.
It's all about the people you're around, right? So
Yeah.
I was around people who are crazy about it. So then I caught it. And you're looking at deals and you're just like, how is this a good deal?
Yeah.
And then you have to really reinforce it by looking at hundreds of these things. And then you start to realize, okay, I'm looking at the rental yield. I'm looking at the land size. I'm looking at what the property is built of. I'm looking at the area. I'm looking at the rentability, right? And you're doing a SWOT analysis.
Yeah. But the agent said it's a good deal and she smiled at me.
Yeah, and she says I can get it for 30K under asking.
Oh, like, you know, they base it on them. So they're trying to,
Yeah, dead right. So then once you activate that brain, you say, okay, what am I trying to achieve? I wanted to buy this house because I want to keep it for 30 years, have a really good cash flow and capital gain. Is this going to help me? Okay, the rental yield's only 3% and it's costing me a $400 top up at 7% interest a week. No way. Flick it on. Or I'm trying to buy a really good property to flip. This one, I can see it's on the market because there's a deceased estate. It needs a bit of work, but I've got the equity to do that. This one's on, right? So we activate that type of thinking where people can start to realize for themselves and alongside the client realize if it's a big deal rather than say, hey, no, this is trash. And based on our mutual clients, I know you do the exact same thing. You try to activate their mind of thinking to say, actually get a bit analytical rather than just asking for advice.
Yeah.
Because that's how you become the professional yourself, right? And that's why people spend money for things like a mentorship or things like coaching because it's superpower once you can actually identify those things.
Yeah, 100%, you know. And you've obviously helped a few of the mentees that come on board. Great success stories from them, you know, helping them get over the line. And them even knowing certain things that are just outside of that actual mentorship transaction, looking at the overall portfolios they might already have and assisting them there. Like you've done it with them, you've seen weak spots there that's costed them more than it should. Yeah. And you've, you know, gone out of your way to help them in that.
Yeah, absolutely. I mean, off the back of your great work, obviously, but people come, I think once they're inspired by the idea of getting ahead in real estate, right? Because you're opening that part of the brain where it's like, okay, I'm going to stop coasting now. I'm going to get a bit more deliberate with my investing and my spending. So we look at their existing lending and we can actually tidy things up straight off the bat while, you know, maybe getting the equity out to do a trade as well.
Yeah.
So we've been able to have some really good success stories. For example, a client who was at a non-bank, just coasting and just hadn't had advice on a mortgage. And then we helped her with the equity release to do a flip. And then now we're taking her back to the main bank, way better rates and a revolving credit with the equity so she can continue to trade at her discretion, which is a super powerful thing. I mean, we've set her up. We've taken her 5 years ahead.
She's being the best of both worlds of a short-term play and a long-term play.
Dead right, So that was one where it's like, it's such a good feeling to be on the other end of that referral because it's a win-win, right? You really help the client out, you get paid, the client gets paid, and we're just doing great business. So that was a really exciting one to help with. But every single person, I think, even outside of this, mortgage brokering and just in life in general, if you're helping someone in a transaction, if you just think, okay, how can I just get this person to come off better off, you were just going to win. Because either, you know, you're going to get paid from that transaction or you're going to get referred and then you're going to just, all these good opportunities are going to keep coming. It's the abundance mindset.
Yeah, 100%. Quick question as well, just what's happening in the market. How many clients do you think you have looking at new builds compared to existing?
Great question.
Yeah.
So again, it's case by case, right?
Yeah.
So we have a bit of a split because you got, you know, your new build leans to the set and forget investor, right? Someone who just wants to follow the market.
Less deposit required.
Less deposit, and it's a set and forget, right? It's a guaranteed master builder for 10 years sort of thing.
Yeah.
And you're going to, your capital growth is going to follow the market and so is your rent, right?
Yeah.
So
because you can't force appreciate it.
You can't force appreciate it.
Which is, you know, renovating, cosmetic, you know, doing it up physically with your own two hands.
Yeah.
You can't do that on a new build.
The value has been extracted by the developer.
Correct.
Yeah, exactly. So that doesn't mean it's a bad investment product.
No.
If the solution to your problem Your problem being, how do I retire at age 60 with equity?
And you're 45.
And you're 45. So
Yeah.
we got some time to
Not
sit,
bad, yeah.
and we need a vessel for our capital growth.
Yeah.
That's actually a good solution, okay? If you're hands-on and you want to maximize your equity as quickly as possible, there is a lot,
of benefits of existing.
way more.
Yeah.
Yeah, way more if you can get your hands dirty, and not even dirty, I mean, just really dig deep and try find value in assets that haven't been painted, haven't been renovated, or just under rented, right? I mean, you've got so many success stories yourself, and so do our clients, of finding properties that have just had one investor sit on it for 20 years, and that there's just so much value there that's not been realized in terms of it's under rented. Maybe there's room for development, minor dwelling on the back, so many options like that.
Yeah.
So I would never dismiss the new build. It's just for a certain type of investor.
Yeah.
Yeah. And obviously lower deposit, right? So if the client wants to invest immediately, there's going to be a situation maybe where that's the maximum equity they can get, right? We need 35% for an existing.
Yeah.
Yeah.
That's why sometimes when people say, oh man, I can buy this house with only 5% deposit. I'm like, yeah, but you're having a fucking 95% mortgage.
Yeah.
You're forgetting the other half of that sentence.
Yeah.
You know what I mean? Like, you ain't gonna be afford to do anything.
Yeah.
You know?
Yeah.
So maybe just, buy better. And again, it's all about knowing what their plan is, right?
Yeah.
If you buy this, you're fucked for 3 years.
Yeah.
Are you happy with that?
Unless you've
when
got
World
awesome
War
income.
III starts at the end of the year, you're fucked anyway. Just kidding. But you never know, right?
Yeah.
So people, I don't think a lot of people actually write out a plan.
Yeah.
And they're just thinking about the fucking weekend, and this is the masses, right?
Yeah,
The
yeah.
masses are a whole bunch of people that
We're
fall
coasting.
into a different category of non-political sentence versus like the ones that actually like not study at university, but like learn, knowledge themselves,
Yeah.
watch people's contents, read books, attend seminars, that know if I bought this one, I'm actually stuck
Yeah.
for 3 to 5 years minimum.
Absolutely.
You know?
And I think when you say that, when you talk about the masses, I totally agree. And I think I'm not saying, and you're not saying that from a point of arrogance and saying we're not the masses, because everyone's had some time as the mass.
Correct.
Everyone's
I
done
was
at
an
least
idiot,
a month.
But there are more idiots out there than smart people. That is just a fucking fact.
Everyone's done at least 1 year or 2 years with the masses, where you're
Yeah.
just coasting, right? You're doing the bare minimum. Like, come on. Like, I don't believe there's anyone in the world who hasn't done at least 1 month as the masses. And then at a certain time, maybe life events happen, and you realize, okay, I need to get
Probably
in the
like
driver's
Elon
seat.
Musk. That's it.
Yeah, he's
Only
probably the
him,
only guy
bro.
who's been on.
He's like
moving
1
to
week.
Canada when
I'm
he's
reading his book
17.
at the moment.
Oh,
he's like
yeah.
he's like 1 week off because he had malaria and almost died.
Yeah.
Since like fucking 1998 or something.
Yeah.
It's mental.
Oh, dude, he's such inspiration. Eh?
Yeah.
And moved to Canada 17. And people trying to say that he used his dad's money, he started with nothing.
Oh, yeah.
I mean, that's one thing that I really hate is when people try to make excuses for
Yeah.
successful people.
Yeah.
Oh, you had this,
Oh,
so you
today
got
you
this.
give someone, I'll give you 100K. Come back in 3 years. They come back and be like, I'll tell you everything about meth.
Yeah.
I'll tell you everything about crack, bro. But I've also got court next week. But the 100K is now 500K. It's like good shit, you know?
No disrespect to any listeners on crack. Everyone
We
can
don't
do their own
discriminate
thing.
here.
But
Yeah, financial
yeah.
education's available for everyone. Yeah, which is hilarious. So,
Yeah.
no, cool.
I did really want to ask you a question, Tama, because
Yeah.
like we get really gassed up when we meet clients that you work with
Yeah.
because they come with a lot of incentive to keep growing their portfolio and building.
Yeah.
So at the position that you're in, you've got a couple of rentals and
Yeah, of course.
owner-occupied or a portfolio. I really want to address the really common thing, which is one of the most common questions I get, which is this trade-off between capital growth assets,
Yeah.
like Auckland properties,
Yeah.
and cash flow, right? So can I just give you an example? Let's say I've got a young family, mid-30s, in Auckland. They got a bit of equity.
Yep.
They got an Auckland property,
Yeah.
okay? And they're saying, look, we're putting too much cash into this mortgage. What is the solution for someone in that situation? Say they've got a really big mortgage.
Yeah.
So now they're gone for maximum capital gains.
Yeah.
And they've got no cash flow on their investment. Say the property's a bit too big for what they currently have.
Their investment is their own occupied.
Yeah, that's all they got.
Oh,
They're
yeah,
all
yeah.
in on their own
Yep.
occupied, and
Yep.
that's like their nest egg, right?
Yep.
So they're shoveling their income into their own occupied mortgage. Now, would you recommend them to stay on that same track, Or what would you recommend?
Well, first thing in this situation, the real life shit is one of them wants one thing and the other one's like, oh no, I'm too risk averse and stuff.
Yeah.
It's always you get human first,
Yeah.
and then you go into the actual practical numbers.
Right.
So if it, like this is very common with mentorships.
Yeah.
But the great thing is that one of the partners might be like, oh, we don't know, we shouldn't take the risk, and one of maybe the husband or the wife. Most likely, it's the wife that's
Yeah.
pushing for this.
Yeah.
It's a weird thing, yeah. It's great. So they'd be like, right now, what's your guys' goal? You guys want to earn a bit of cash and chip away at the mortgage?
Yeah.
Or do you guys just want to be in a position that if something went wrong, you guys have like 30 or 40 grand put aside?
Yeah.
So that's what can come from flipping.
Yeah.
So you don't have to do flipping to just like go on holiday
Yes.
or buy a new car.
Yeah.
Some people can do it because there's no other way to have any fucking safety net if shit hit the fan.
build the bank.
Medical bills or anything like that, right?
Yeah.
But if they've got equity of at least like 200K to usable equity,
Yeah.
they can get started on doing a flip that might make them like 30 to 50 grand.
Absolutely agree.
You know?
Yeah.
So that's what I tell them. And they go, okay. And it's like, well, this is the things that will physically happen now.
Yeah.
If you take out that money, you guys will now have two mortgages. You will have the increased mortgage, you have your current existing mortgage,
Yeah.
and you have to use that flipping mortgage to get a second one, right?
Yeah.
You're going to have higher premiums or higher repayments
Yeah.
straight away.
Yeah.
Are you guys going to shit your guys' selves when that happens? Or you guys understand the math behind this?
Yeah.
Yeah, we understand the math behind this. Cool. Are you guys wanting to do flipping? They're going to be like, yes, or we want to use it to buy a buy and hold. And that's when I'll be like, okay, if you're going to use it to do a buy and hold, unless you're buying something at like 12% yield or something crazy unicorn,
Yeah.
that amount of cash flow that comes in isn't going to do much to change your guys' lives
Yeah.
at all.
Exactly.
All you're going to have now is two fucking huge mortgages, but this little one's putting an extra $100 in your guys' account a week.
Yeah.
If you're lucky.
No,
at
I
today's interest rates.
Most aren't cash flow positive.
Yeah, most aren't. I mean, if they're 12%, you know?
Got to pay tax.
So then they're going to be like, okay, so after that's done, after 3 months, where have you guys, what's changed in your guys' lives?
Yeah.
Probably nothing.
Yeah.
Right?
Yeah.
You have to wait for years to happen after that.
Yeah.
So then I'd be like, if you want to go, obviously you can speak to your accountant and see the tax implications of going into trading.
Yeah.
But if you want something that's going to be a fast result to give some relief
Yeah.
on to chip away at your mortgage or have a safety net of cash,
Yeah.
do flipping.
Yeah.
And there's heaps of other questions that come from that.
Yeah.
Locations, any work you guys want to do yourselves, which contacts do you know that can help in the renos,
Yeah.
how much money are you guys actually wanting to make safely, or you guys going to get greedy here and fuck things up?
Yeah.
All those questions come through.
Because exactly right, man. Like that other client that we were talking about before we started filming, who had he's self-employed, and he's got a big owner-occupied mortgage, and he
Yeah.
made 65K
Yeah.
on a flip. I mean, that's a perfect example. Like, regardless of he's self-employed, so he can
Yeah.
earn a higher income.
Yeah.
But that solves so many problems
Correct.
for the household.
And tax half of it. Fuck it.
Tax half
But
of
you've got
it.
30 grand there you never had yesterday.
Yeah. I mean, that's just covered a good chunk of your mortgage payments, right?
Correct.
So we're solving that problem just by being a bit more active outside of your own occupied investment, right?
Yeah.
Getting into the other side of the balance sheet, because at the end of the day, lean towards the liability. If it's a big unoccupied mortgage, we're not generating any income from that.
And this is the other thing that I said at the start of the show, like dumbing things down, right?
Yeah.
One of the things that pisses me off is the fucking word cash flow.
Yeah.
It just sounds mean ass.
Yeah.
Sounds fucking awesome.
It sounds
Grant
sexy.
Cardone-
It sounds sexual.
It literally does. It sounds like Grant
Yeah.
Cardone talks about it. Everyone talks about it.
Yeah.
But what they need to realize, the actual meaning of it is there needs to be another fucking word in front of it, which is positive.
Yeah.
Positive cash flow.
Yeah.
And they're like, okay.
Yeah.
But that could be $1.
Yeah.
After all expenses, if you're $1 in the green, you're
on.
positive cash flow
Yeah.
by definition. So I would rather people just fucking delete the word cash flow and just say the actual number you're getting per week extra.
Yeah.
So there's no such word as cash flow anymore.
Yeah.
You're buying this house, it's fucking 600K, and after all said and done, you guys make $64 a week.
Yeah.
Replace it with that sentence.
Yeah.
So then they can sit back and go, fuck, is that it? It's like, yep. Oh, okay. Well, I thought cash flow is this big thing that retires people. It's like, yeah, but it takes a while.
Yeah.
Because you got to chip away at the mortgage so that $64 becomes $164.
Oh,
and then it becomes this and this. And then they go, oh, but cash flow sounds so cool. Nah, bro. Fucking quantify what the dollar is and then start saying that when you buy that property.
Cash flow pays the
Don't
bills.
say cash. Don't even say cash flow positive.
Yeah.
Because that means $1.
Yeah.
Or it could mean $1 million. Say we buy this and we make an extra $240 a month, profit free, like profit. That's it.
Yeah.
That's how much we make off this.
Yeah.
So times 12 months, we end up with $6,000. I don't know the maths.
But I mean, where's that 6K going to
Bro,
go?
eaten.
Probably replace the roof.
Gone.
Yeah.
Fucking maintenance out the well. So that's where people need to actually see it properly. And that's why when you put the numbers in on the buy and holds on Investor Pro,
yeah.
they can see it. And that's when people are going to be like, man, I thought fucking long-term buy and holds was the key. It's like, yes, it is, but that's why it's a fucking long play. It ain't
Yeah.
to actually help anything in your life now. And this is how I start my seminars off, because I'm
Yeah.
known for flipping and trading.
Yeah.
I can definitely talk about buy and holds, but I weigh up the numbers. And I'm like, you ain't financially helping out your family
Yeah.
with a fucking $84 a week.
Exactly. I mean, you hit the nail on the head when you're saying about define cash
Delete
flow.
the fucking word.
Delete the word. But I mean, or redefine it. Whereas cash
Yes.
flow is to, we're talking about the ability to cover majority of your expenses, because
Yes.
there is that misconception that I'm just going to buy all these massively yielding, highly yielding properties that 9% above,
Yep.
and that I'm just going to start earning money from that. And that's just not true, especially if you're fully leveraging to purchase that. You're never
100%.
going to cover your costs, and you're only really going to make money on the property once you sell it. But that doesn't mean that it's a bad thing.
No.
It just means that you have to redefine your relationship with the investment. And like you're saying, if you want to make those numbers more sexy, the buy and hold, reapproach once you've made 500 grand from maybe a couple trades, or maybe you sold your own occupied and you say, hey, I'm going to build a really solid investment portfolio at 60% RVR, 12% yield, and then you'll actually be getting some cash flow. And now we're getting closer towards that whole financial freedom, not to speak out of turn.
And the thing is, like, if you're making only like $60 or $100 a week, like after cash flow positive or whatever, and you're working full time, you're like, I can't fucking stop working.
Yeah.
I'm only
No
working
way.
100. If I lose my job, I've got
You
my
gotta sell
house
the
to pay
rental.
for, and then I've got the rental to pay for,
Yeah.
and I'm fucked. I have to keep working. If anything, I need to add more to that 100. So I'm going to do 60 hours a week instead of 50 now.
Yeah.
And then you're like, at the end of it, you're like, and then I get hit with this fucking tax bill.
Yeah.
And I'm down the year.
Yeah.
And I'm wondering, what's all this even for?
Yeah.
That's
So-
what actually physically happens to people around April, May.
Yeah, that's when you got to get seriously long about it and say, look, okay, what's my alternative? I've actually got these one or two investment properties and I'm hurting right now.
Yep.
But if I sold them, what would I even do? So it's weighing it up and talking to your advisor and figuring all that stuff out.
Yeah. It's all this long-term play, and then Putin launches the missile anyway, right?
Oh, what was the point? Yeah. We should have just sold it.
Absolutely.
Bought that
fuck it.
lifestyle
I was
block in
busting my
Dunedin.
ass for 60 hours a week.
Yeah.
But the missile, there it is. It's coming right for us.
Honestly, man, it's getting more real because I just spoke to a client yesterday.
Yeah.
She's lived up in Auckland, sold the farm.
Yeah.
No, and speaking in terms,
Yeah,
but she
yeah.
sold a place up here
Yeah.
to buy a lifestyle block in Dunedin or near Dunedin.
Oh, yeah.
On the solar panels fully, and she's
off the grid shit.
She mentioned Putin a few times.
Really?
Yeah.
She knows, eh?
And not just the Tucker Carlson podcast. She was like, this guy's going to end the world.
She quoted it without the translation.
Yeah. She's been
I
following.
watched it without the
She
subtitles
knows the
on.
nukes are coming. Yeah.
Cool. All right, should we end it there then?
Yeah, man. Yeah.
Awesome. So how will people find you?
You can find us on Facebook, Instagram, but Facebook and our website. You can just send us an email, give us a call.
Which is?
Blueprintfinance.co.nz, but 021-269-2779. You call me anytime.
Cool.
Yeah.
Double tap the screen to get that 10-second replay.
Yeah.
Awesome. Well, thanks for coming on. First guest.
Yeah, thanks so much for
And
having us, man.
we'll
And
definitely see you more.
I want to say thanks for all the great work you're doing for Kiwis, man. Just making people think more about their financial position. Like, you should be really proud of what you and the boys have done. And
Yeah. And,
Thank you, James, as well.
Yep.
Legend behind the camera. And
rage at people when they need to be fucking raged at.
yeah, exactly.
Right? Because at the end of the
Lifestyle
day...
check.
Yep, and how we position myself online and stuff, there is a lot of people you have to be connected to. You yourself, other people out there, the team. So at the end of the day, it's a lot easier said than done.
Hell yeah, man. Yeah. Nah.
Cool, awesome.
Cheers, brother.
Cool
Thanks for
as.
everything, man.